Well, Diageo's Paul Walsh joins me now from the company's headquarters here in London. Thank you so much for joining us today. Now, I wanted, first of all, to get a reaction from you on the share price. It's down some 1%. The rest of the market seems to be going up. What do you think analysts are disappointed with?
I'm not really qualified to comment on the share price. I think over the period of the day we will see what happens, but I prefer to focus on the results. The market will determine the price. That's
fair enough. You have a greater reliance on the US market than some of your rivals. How concerned are you about that country going through a double-dip recession, and how do you change your strategy to accommodate that?
Well, before we talk about the US, let's just put the total numbers in context. They're actually bang in line with guidance. We've grown our top line, we've grown our bottom line, we've invested more in marketing, and we've had a record year of cash flow. And the confidence that we have in our business allows us to accelerate the rate of dividend increase. Yep. So we're saying that we're going to move our final dividend to a 6% increase. I think overall, given what the world has been through, those are a pretty robust set of numbers.
They certainly are, but on the US, there are concerns that actually, because you're so exposed to the US, you make 40% of your revenue in the US, and we've had such concerning economic data out of that country that investors might wonder, well, what do you do if you have to cut prices further?
Well, first, we haven't cut prices in the US. If you look in the second half, you're actually seeing the price base firm. The reality is that we have a diverse business geographically, and for many years the US was quite an engine of growth. The US may be going through a difficult period of the time, but I do believe momentum is building. But that aside, I think longer term the US is going to be a great market for us. We may have to contend with 12, 18 months of more unevenness, but longer term I would not count against the US consumer.
So how much do you believe that the US will actually increase your revenues by? If I speak to you in, let's say, 18 months, do you believe that the US will be over the worst and that your profits will grow out of the US market?
I certainly do believe that. If you look at the US, basically until the last couple of years, we were seeing category growth of 3 to 4%, and we were growing on top of that. Now, to put that into context, we're still seeing category growth. It's nothing like the 3 to 4% that I just referred to. It's more like 0 to 1%. And we are getting some share gains on top of that. So the growth is muted, but it is still growth. And therefore, I'm very optimistic longer term about the US. But I'm not expecting a snapback. I think we will just see in the US over the next 12, 24 months a gradual rate of improvement.
Mr. Walsh, we only have 30 seconds left. I just wanted to get also your views on the Asia-Pacific region. That's where the growth is. How do you, want to capitalize on that?
Well, a third of our business is in emerging markets, Africa, Latin America and Asia, and we're seeing very strong growth coming from all three of those regions. So we're very encouraged about our emerging market plans.
Paul Walsh, thank you so much for your time, the CEO of Diageo there.